What is behind the new construction slump? So today at lunch, why not? I clicked on the CNBC as I was eating my sandwich, and sure enough, there in bold headlines, new construction across the country, large home builders are lowering prices. Um, and, this is something that we've been hearing anecdotally, but it's certainly happening. And I'm wondering what data is actually supporting this anecdotally.
You want to take that one first, Rick?
Yeah, we're seeing over a 10-month supply of inventory from the builders, which is getting up to kind of problematic territory. Normally, you're looking at about an 8-month supply of new construction, and that covers completed homes, homes under construction, and homes where the lot's basically ready for them to start, but they haven't started to build. And they've been tracking this data since the 1970s. A 10-month supply is much higher than what they normally see, and probably the highest we've seen since we peaked at around 13-month supply right before the housing market crashed back in '06 and '07. Sales for the last month reported also plummeted. So, kind of we have too much inventory and nobody's buying, double barrel problem for the builders. We went from extraordinarily strong sales in April to dropping down by about 100,000 units on an annualized basis in May. And home prices from the builders are off probably 10 or 11% since the peak of the market a couple of years ago. Now that's partly because they're building smaller properties and doing what they can to offer properties that are less expensive, but also partly because buyers are kind of pushing them to get prices more affordable. So builder sentiment is as low as it's been in many years. They're not seeing the foot traffic they like. Their expectations for sales going forward aren't particularly optimistic. And because of all that, they're slowing down on construction.
Yeah, and the other things I can add there are the builders have been for 3 years have had a rate buy down
Yep.
advantage. And so, if I'm looking at the 30-year fixed and it's 7%, and I go to buy a new property and it's 4.9, or it's, even if it's 5.5, like that's a big advantage. And that trade may be wearing thin a little bit. So, we've got buy down rates and we've got other incentives, and all of those tricks are starting to maybe wear thin. And so now they were doing that. That rate buy down is significantly more impactful than a 3%
Price
change
growth.
in the price of the asset. And so that was a much more effective tool. And if things like the spread narrows, when the spread's real wide, that could be easier to buy down. And so if the spread narrows, maybe that makes that more difficult. And so I think there are those kind of things that are going on. And so it was buying a home was super cheap forever. Then it was suddenly not. But in the new construction space, it still kind of was. And maybe that's wearing thin. And so that was one impact. The other impact is that, we're seeing now the new home numbers from that April, May, June period, which was peak fear, but that I mentioned we talked about earlier, right? So, in April, all markets were cratering. People were stopping everything, and so that reversed, pretty quickly. But we're now seeing that data from the second quarter for home builders, and so maybe those start to tick up a little bit in the coming months.
One of the other things that doesn't usually get reported is where the builders are building. And if you look at the majority of homes being built, they're in the southeastern corridor, they're in Texas, and they're in Colorado. And all those markets we've talked about earlier in today's recording are markets where people had been moving in large numbers, but are no longer moving in large numbers. And so this would not be the first time that the builders didn't get the memo and kept building after market conditions changed. And I think we are seeing probably a little bit of that in those markets where most of the building activity was taking place.
It's super interesting because, Mike, as you mentioned, that gimmick or that trade, which was the rate buy down, boy, that was the ticket. Um, Folks were coming in droves and saying, well, I can get a brand new house on this brand new street with brand new everything, and my rate is sometimes a third or even more of what it would be somewhere else for an old house.
Right. And
Amazing.
that kept the price of the house
Oh,
fine.
yep.
So when we think about how the new construction community is going to deal with this, how do we look at permits? How do we think about, I mean, can they just shut the spigot off? What are the ramifications for the larger market as the inventory begins to build?
So I think the most likely scenario is that the builders slow down on permits and probably slow down a bit on starts while they're working through the inventory backlog they have of homes under construction. The number of homes under construction was recently at an all-time high. It's down a little bit from there now, but they still have a lot of that backlog to work through, and I don't think they want to risk overbuilding in the short term and sitting on a ton of inventory that they have to discount to move. So I would not be surprised if for the next few months, while they're trying to get through that supply glut, if we don't see lower numbers in terms of starts and permits. And the other thing that factors in there, Jeff, is multifamily construction, which gets included in the housing start numbers, is also much lower than it's been in recent years because we had a near record number of new apartment units come online in the last 12 to 18 months. So I think that combination of builder sentiment being a little bit negative, a buildup of inventory under construction, and candidly some concerns about price points going forward with concerns about limited labor because of deportations and rising prices because of tariffs. I think that's going to tamp down builder activity for at least the next few months.
Yeah, and you can already see the starts and permits are down significantly. So, you know, the it'll be fascinating to see, if rents are down year over year and we stop building, we've stopped building apartments or significantly do rents pick up next year? Yeah, finally we don't have we have like we've had this bit of glut stuff coming online, new stuff coming online. Therefore, prices are muted. But that glut's like we stopped building 3 years ago, and so does that impact the rents in 2026 or 2027? And there are definitely some folks who believe that that's the case. So you have a 2026 now fewer homes coming online, and those start to normalize the inventory numbers on the new construction side and maybe show some price support.
When we think about the ability of these large builders across the nation, especially the publicly traded ones, do we have a grasp on what ability they have to be able to cut pricing while still maintaining some level of profitability? How do we look at that in the data?
The bigger builders are all publicly traded companies. So their margins are published. And it's a it's a little bit fuzzy because they obviously don't want their stock prices to tank by talking about eating into margins. But so far, they've been able to do the buy downs. They've been able to do the price reductions more recently. They've been able to absorb what are likely at least moderate increases in labor costs and materials and product costs without dramatically impacting their margins. So, these are properties that typically have a pretty healthy profit built into them. So they probably do have a little bit of wiggle room, but the whole forecasting and reporting business in not just the housing market, but the stock market in general is, I think, kind of purposefully opaque. I don't think you're going to see any builders having to declare bankruptcy because they're cutting prices 5%. Yeah, I think it is going to get tighter for them in the coming year.
Yeah, and I think the publicly traded builders who have reported recently, they're all showing margin shrinking. Like
Yeah.
they're all of them. It's not dramatic, but it's it's 22 to 17%. It's that in that range, 21 to 20 or 19%, like those kind of profit numbers. And so you can imagine more compression there, unless we get lucky.
But again, the builders, I think this cycle have been much more adept at adjusting to market conditions than they were if you go back to 08. When they started to see affordability become a real issue, they started looking at smaller lot sizes and smaller properties. And they did that on purpose so they could still make their margins on a less expensive property to build. So, since a lot of these homes are still under construction, probably in a lot of cases, early stage construction, there might be things they can do to minimize costs in a way that helps them protect those margins a little bit.
Well said, gentlemen. Thank you so much.